Good afternoon, ladies and gentlemen. This is Brian Dewars with the Uncommon Wealth Partners, bringing your market update and Bitcoin briefing. It is a beautiful Friday afternoon here in Ankeny, Iowa, and S&P 500 up 13.59 year to date, 17.05 on the Nasdaq, 9.065 or 9.65 on the Dow, 18.77 for gold, and 173.94 for Bitcoin. Got a lot for you today, so I'm just going to jump into it. A lot is going on in the news. Markets have been bouncing around, so let's take a look. This is the S&P 500 on the daily. Last time I showed you this box or trading range we've been in for a while, and we broke out of that to the upside over the last month, and we've been giving it all back. And so it's been a rough last few days. Markets down, a lot of percent in a very short amount of time. And so, we've bounced out of that box, but, trying to look like get back in the box a little bit. And so I want to zoom out, though, on the S&P 500, just because this shows you the volatility. I'm going to zoom out to the weekly chart here, and you can see it a little bit better. This is the downturn into Christmas that we had, and now we're pushing back up. And on the weekly, you kind of see these two red candles. We've got red dots down here. Our kind of momentum, or our valve that we kind of call this, the squeeze indicator, is just waning. And so showing you that weakness in the market. Looks like it wants to kind of roll over a little bit. So we will see if we get something more, like this in the red and yellow down here that we've had in the past, or if the market will rebound from here. But headwinds galore. We hear about China and Trump and the interest rates and all that. I'm going to have a big update on the interest rates here in a little bit. But this is the monthly zoomed out of the S&P 500. And you kind of see, as you zoom out, we still have a squeeze indicator on here, which looks bullish, surprisingly. And we have this breaking out of that box as well. And so as you zoom out and take a deep breath, we're investing for the long term. This chart actually looks really good. And doesn't show, major signs of weakness yet, but red arrow up here, and something we're just gonna have to continue to watch. But I think I want to just put context around why the market's been so uncertain. And the point is, as you look from here, in 2009 coming out of the recession to up here before it gets super choppy sideways, that's a bull market, big bull market. And, the markets can trade sideways for several years. We did that a little bit, peaked in 2014 and traded sideways really into the middle of 2016. And so the market's been on a tear, but it's, having hiccups a little bit here. And so gold, this is a daily chart in gold, or GLD, the ETF that tracks gold. And you can kind of see here, this just big momentum surge. I wanted to show you the daily chart just to show you how much gold has really moved in the short amount of time. It has really ratcheted up. We talk a lot about gold. We also have an ebook coming out on gold, just a little introductory piece on gold. I think it's one of the more misunderstood assets of the world, and one of the oldest assets in the world, dating back to the Bible, of course, and even pre-biblical times. Gold's been around basically in every age, and so in that. We're going to highlight more a little bit here in the later in this YouTube about gold, but wanted to show you that move that it's kind of made in the short term. And then we have Bitcoin here. This is zoomed out on a weekly chart. You can kind of see it just put in that bottoming pattern. Our moving averages here crossed bullishly, and then price is kind of consolidating sideways here about 10,400 at the shooting in this video. And so we're going to see if Bitcoin's putting in a foundation here to move higher into the fall. But wanted to spend more time today on Bitcoin and some of the news affecting all this stuff. But this is kind of these red lines are kind of like parabolic lines. And this guy was basically that I follow on Twitter was basically talking about how Bitcoin trades in these parabolas. It's one of the actually best things to trade if you're a trader, because it is so volatile and the swings are so big. And so you kind of see these almost like ski looking red lines, and he's stating that he thinks a new parabolic move is just starting. That's just going to take us well above $25,000 per Bitcoin. And so, like I said, today we're about 10,200, 10,400. So it's interesting. I'm not saying that's going to happen, but that's just one gentleman's take and kind of information. And looking at these charts, it kind of makes a compelling synopsis. So with that, I wanted to continue just to talk about gold, interest rates, and currency. And I have this in here. 1938 cost of living. A new house was $3,900. Average income was $1,700 a year. New cars $8,600. Average rent $27 per month. Tuition to Harvard $420 a year, not a semester. Movie ticket was a quarter. Gasoline 10 cents. Postage stamp was 3 cents. Granulated sugar 59 cents for 10 pounds. It's actually it's actually fairly cheap still. Not that cheap, but you get the point. And so, milk, coffee, bacon, eggs, so on. But I don't think we appreciate enough, even as stable as the United States dollar has been. It has been incredibly inflationary since 1914. And we went on to the Federal Reserve standard, and since then, the dollar has lost more than 99% of its value if you measure it in terms of, the stock market, the goods and services, this type of stuff, cost of living, and gold. And so in that, we've had one of the most stable currencies in the history of the world for this last 100 years, but it's still been incredibly inflationary. And that's why, we stress on our podcast about the 7 sources of residual income and owning and controlling assets that produce cash flows, because those assets are a hedge against inflation. And so if you own real estate, you have the ability to raise rents over time. If you own a business, I think about like McDonald's, the cost of a cheeseburger has gone up almost every year since, McDonald's got broken out into franchises. And so those businesses, are able to, basically monetize inflation. So that's why we keep stressing that you've got to own assets that produce cash flow, because inflation is the silent killer. And as we talk about interest rates, we're not getting paid 5 or 6% on treasuries or a CD anymore at the bank. And it's going to actually go the opposite way as our country population ages, our national debt increases, and so on. So I wanted to talk, we've been talking about gold, and this was a cool headline. China restricts private gold imports as it adds 10 more tons to its own hoard. And so as we've talked about in the past, you'll see in our ebook, the large central banks, including China, own tremendous amounts of gold. Total gold in all the world is about, roughly $7 to $8 trillion, depending on the dollar value of an ounce of gold right now, but probably $7.5 trillion globally. And that's owned a lot by these central banks. And again, no currency is backed by gold, but it's used as an asset to hedge currency risk. And, in the place of currency, you can use the word credit or debt, because all money in every country in the known world is a debt-based or central bank or credit-based currency. And so for our economy to expand, the debt supply or the money supply has to expand. And so when we have recessions, it's typically when that money supply or that ball of credit is contracting. And then this guy had an interesting post on Twitter: the 4 people who changed the course of money forever. Kublai Khan, paper money in China in 1397. The Medicis, I believe, is in Italy. Created basically fractional reserve banking, or banking with credit and interest. 1971, Richard Nixon took America off the gold standard. And then 2008, 2009, Satoshi Nakamoto, released the white paper that was and is Bitcoin. And so obviously there's a lot more events than just those 4, but it's interesting that, in a large way, money really hasn't changed, in 400 or 500 years. It's just the strength of the country producing and backing the currency. And it has been strong and consistent for the United States. But with that, the inflation has been the silent killer. And so I got a couple more. These are just staggering. Nordea Bank, which is a big bank in Denmark, will start offering 20-year fixed rate loans, which is typically mortgages, that charge no interest rates, or no interest as rates plunge. So you're looking at, think about buying a house and having a 0% interest rate on your home. And basically what we're experiencing globally is not just in the US. I'm going to show you another thing here, is that they are reducing rates below 0 to try to incentivize asset prices and for you to buy assets that produce cash flow. And so you kind of look over here. This is a guy I follow on Twitter, this Charlie Bilello. I don't know how you say his last name, but he has really good stuff. As November 2018 high in treasuries, 3-month treasury was 2.41, down to a 30-year was 3.46. And now, just as of the other day, a 3-month treasury is still paying 1.92, and a 30-year mortgage, or not really a 30-year mortgage, please don't think your mortgage is 1.98 yet, although it might be in a couple of years, but the 30-year bond is paying 1.98% return. And so that's what you're seeing. Typically, if you hear that the yield curve is inverted, which is very close, is where the 2-year paying 1.54 is more than the 10-year paying 1.55. So if those came into parity at 1.54, or this 10-year was below that, that's when the yield curve is inverted. And that typically is what signals a recession. And so if you're hearing that in the news, that's what that means. That's what they're looking for. But treasury rates have compressed dramatically. And if you're refinancing, it's maybe a great time to do it. This is another one from this Charlie guy. He's just showing negative bond yields, kind of like what I'm talking about over here with Denmark. So, this yield curve you see here on the U.S. Treasury is from 3 months to 30 years. Some countries have 50-year bonds. Like Switzerland has a 50-year bond. Well, from basically 3 months to 50-year debt in Switzerland is negative bond yields, like negative interest rates. Germany, Netherlands, Finland, 30 years negative interest rates. Denmark, Austria, 20 years. 15 years, Japan, Sweden, France, Belgium, Slovenia. I mean, these are major countries, and so this is where the rest of the world is heading, is towards negative interest rates. It's crazy to think about. And then down here, this Denmark's third largest bank said this week that customers would now be able to take out a 10-year fixed rate mortgage with an interest rate of negative 0.5% interest. It's almost like they're paying you to borrow money, which is crazy. But then if you think about it in terms of your savings, if you had $10,000 and they're paying a negative interest rate, they're taking money from you. So it's trying to incentivize you to go and buy stuff and, buy the stock market, buy homes, go buy rental properties, go buy businesses, go do anything but keep your money in cash, trying to incentivize the economy. It's just crazy. And so to end on these, I just wanted to end on cryptocurrency. Payments giant MasterCard, which is one of the largest payment networks, credit card networks in the world, is seeking to hire several blockchain executives to lead cryptocurrency and digital wallet projects. So again, we see one of the major financial institutions in the world pursuing a blockchain cryptocurrency narrative internally, not only with their money, but their human capital as well, hiring that knowledge as well. So, and then lastly, to frame in what I've been saying about gold and these negative interest rates and the compression of our yield curve and the rampant inflation that we think is coming. And you've started to hear some of that. Walmart just came out and said that their prices are going up, like 4 or 5%, because of inflation. And so one of the best hedges against inflation is gold over the last 10,000 years. And you see this chart down the bottom right where gold and Bitcoin are starting to trade almost in a correlated fashion as a hedge to all of this fiat money. And so it's going to be interesting to see how things play out. You're seeing Russia and China add dramatic amounts of gold to their reserves. And you've seen the price of gold on the first chart is ramping pretty dramatically. So we want to keep covering these things. I think gold and Bitcoin and currency and money are one of the most misunderstood topics in personal finance. And it is important because inflation is insidious and it's the silent killer of your money. And so again, that's why we're spending so much time on the 7 sources of residual income, owning assets that produce cash flow, owning these different instruments. And talked to a guy today, his dad lives in Israel, and he was talking about the fact that like his dad has an account that has money in euros, has money in US dollars, has money in British pound, and depending on what he needs to do, he can spend that money to facilitate, in that economy or that trade, depending on where he's doing his dealings. And it's just interesting, being in America, we wouldn't even think about that. We wouldn't even think about having an account where, oh, I have currency in euros, I have currency in yen, or I have currency in the Canadian dollar. It's conceivable that it could be like, well, I have a bank account and I have some money that's just in gold that I could spend against. And there's I have Bitcoin as part of my cash reserves and I have US dollars. I think that could be where things are headed. And it's just unique for us in America because our currency has been so stable. We haven't really experienced that multi-currency economy like Europe has, like Africa has, like China has, and certainly like South America has with their instability down there. A lot of these places around the world have used dollars as a second or even primary currency to their currency that they're in because it's been so stable. And I think as you look at cryptocurrency and the blockchain being able to, create a asset-backed currency or asset-backed token, if you will, and that is kind of the power of Bitcoin, is that it is so transferable and divisible and encrypted and all those different things. It's not inconceivable to think that you might keep 25% of your cash in gold and 25% of your liquidity in Bitcoin, and then the other 50% in dollars. And so we're going to continue to talk about this because it's a foreign concept for us in America, but I think it is the future. And I think we're already seeing it and experiencing it in the rest of the world as a normal thing. And so that's why we're talking about this, and I think why it's important, and then its impact in regards to interest rates and so on. So anyways, hope that was informative. If you have questions, please reach out to us, uncommonwealth.com. You can schedule a free consultative call. We'd love to hear from you. Thanks for watching and having an awesome weekend. Thanks, everybody. Bye. The material in this video has no regard to the specific investment objectives, financial situations, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell a security or any other related financial instruments. Nor should any of the content be taken as investment advice. Any of the opinions expressed in this video are subject to change without notice, and Uncommon Wealth Partners LLC is not under any obligation to update or keep current the information contained herein. Uncommon Wealth Partners LLC and its respected officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. Uncommon Wealth Partners does not accept any liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decisions.